Hello, this is John Gilbert at Security First Asset Management with a weekly market update for the week ending July 21st. I wanted to remind everybody of our upcoming event that will be happening this upcoming Saturday. That is July 27th. That'll be at Pinstrikes Bowling Center. That will be our halftime report in bowling. In years past, we did this at a golf course, but we decided to change that. So at this event, we're going to be going over what happened in markets in the first two quarters of 2024. Then we're also going to be looking ahead at some things that will be happening later in the year and their potential impacts on the economy. After that, we'll have some food, we'll have bowling. There's all sorts of activities, so if you want to bring the grandkids, feel free to do so. So once again, that will be July 27th, this upcoming Saturday. And so moving on to market news, last week the stock market saw large swings. So at the beginning of the week, there was a rally. And so US markets rose to new highs. However, as the week went on, a lot of those gains kind of tapered off. That was led by weakness in the tech center. And so the major domestic equity indexes ended the week mixed. Some were up, some were down. And so there was a rotation in market leadership to small cap and value shares, and that continued, and market breadth improved. And so the narrowly focused Dow Jones Industrial Average outperformed, while and value stocks outpaced growth stocks by a large margin. While on the other hand, the S&P 500 and the Nasdaq, they closed the week lower. And so the leadership rotation was a key theme for financial markets last week. And so what does this mean? So throughout the beginning of 2024, we saw where growth stocks and tech stocks were leading the market, right? They were the ones experiencing the most gains. Whereas in the past few weeks, we've seen that start to shift a little bit. So instead of the tech center leading the market, we've seen that be a small cap and value shares. And so a major factor in the underperformance of growth stocks, especially in the tech center, was a sharp decline in chip stocks. So after, throughout the year, we have seen that stock prices and interest rates have largely moved in tandem, right? And so interest rates have been moving higher, and stock prices have also been moving higher in the early part of 2024. However, the relationship has kind of shifted recently. And so we've seen that interest rates have been declining, and that's kind of amid the slowing inflation and the approaching Fed interest rate cuts that are going to be coming up. Now, equities, on the other hand, they have continued their uptrend, they've continued moving forward, and that's helped by rising corporate profits and earnings. And so the Fed could consider lowering could consider lowering its benchmark short-term interest rate. And so they are going to be meeting later this month. It's not likely that they're going to be changing interest rates at that point in time, but during their meeting in September, there is a high chance. Right now, it looks like there is a very good chance that they will be lowering interest rates at their September meeting, but that remains to be seen based off of data that may come out between now and that time. And so the Fed has a dual mandate to promote maximum employment and to have stable prices. Now, for some time now, their focus has been on stabilizing prices or getting inflation under control. And that was fine because the economy was proving to be resilient. Unemployment was low. Now, recently, the Labor Department's report of weekly jobless claims has been suggesting that unemployment is starting to rise. And so as a result, the Fed has kind of been having to more strongly consider this dual mandate that they have of both maximum employment and stable prices. And so Fed Chair Jerome Powell said last week, now that inflation has come down and the labor market has indeed cooled off, we're going to be looking at both mandates. They're in much better balance. So the Fed is trying to have a soft landing. They're trying to adjust interest rates without negatively impacting the broader economy. And so these next few Fed meetings, one later this month and then in September, and then throughout the course of the rest of the year, are really going to give us a good feel for how the rest of the year is going to go. That's all for the weekly market update this week. Thank y'all so much for tuning in.